Hello guys, so this is Naga Smile Trader once again. Um, so for today's trade, is actually the market is already closed. So I just took some few trades today, just some few minimal trades. So which is just two trades actually. So not just two trades, but I know two strike prices which I entered. And so yeah, will explain a little bit how I managed to book some profit even though the market is on the sideways today. So as you can see in the morning, while the market opens, I was waiting for for the candle uh, to be closed, and let me show you. So okay, so in this chart, oh wait. Mm, okay, so for Bank Nifty, let's see. So uh, I'm sorry for the background noises, okay, but anyway. So in the morning when the market opens, there was a gap up opening, but then the market seems to be in a confusion or whether which direction the market is going. So that's when I was waiting. Normally what I do is in 5 minutes chart. When the market opens. Uh, so when the market opens, if what I usually do is like if the market opener candle 5 minute candle is a green candle on a gap down, then that's when I'll definitely go for call side. And if the market actually opens with this 5 minute first 5 minute candle is red, just in the case of this one, since there was a gap up, what I will do is I will just if this candle is like actually red, then that's when I will just get I will just enter and make a position on put side. But since although even though it's a gap up, the candle formation on the first 5 minute candle is like green, so that's when I hesitated a little bit and I didn't enter here. What I did was I entered somewhere around like so I entered at this level. Why oh sorry, yeah, this level. Why I entered this level is because uh, as you can see there was a uh, as you can see there's an EML line which the market comes to this level and get some rejection. So that's when I thought I will get my entry. I will make my entry. So actually like this should be my entry point, but I didn't book my first target at this level. I thought the market might rebound and make some corrections, but it didn't happen. And so the market for the whole day, okay, so my stop loss was around this level. So it actually at once my first stop loss was at this level, so my stop loss was hit, but I held on to some quantities, and then I re-entered again. So let me also show you on my order book. So as you can see, at in the morning session, I entered at 573, and I exited some quantity. Three lots when the market was actually at its highest peak. So somewhere around this level, I exited the first target, some quantities, but I held the other 7 lots. In total, I bought 10 lots, but I sold off for 3 lots at 600. But then I hold on to the 7 lots remaining and carried over. So what it happened was the market actually rebounds, and it came to my stop loss and hit my stop loss. So what I did was uh, so yeah. So at one time, the market came to my stop loss and it hit it. But after some time, I saw an opportunity again, so that's when I re-entered. So my re-entry was at 555. So mm this is the first stop loss it hit, and this particular trade was ended. But then while I was looking at it, there was another opportunity, so I re-entered at this level. After the formation of this good candle, I make this entry again, and my stop loss was just at this level. So my target was actually in at this level again. But since the market was just on a sideways for the whole day, uh, at some point, okay, so let me show you the exact position where I exited. So yeah, this was it. And my initial target on the second trade was at this level, but since at once the market came to almost hitting my target, but then it get rebounced. And after I came to know that the market is going to be on a sideways today, I was not that confident to hold the position for that long. So that's when my target was minimized to this level, and this is where uh, yeah, so this is where I exited with this candle, with this green candle I exited. And so I only managed to get only, like 3,600, is it? Yeah, so 3,600. I only managed to get 3,600, but that's a good one, because in the morning I was in a loss of like 2 to 3,000 again after it hit my stop loss. So that was it. And for this other Nifty trade, it was a hero zero trade. Okay, guys. So I traded with this strike price 25,150 strike price. When I was looking at it, it was just after uh, past 3 o'clock already. So as you can see, like it's 3:15, 3:10 actually. Oh no, 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 3:07. So when I see that there was an opportunity, because here the strike price was moving at 1.234, not even reaching 1.5. So what I did was, and this particular strike price was at 6 to 7 straight price ranges. So um, I saw that opportunity, and when I actually like check for the chart there, see, I just traded in this candle. Okay, so in this candle, I saw some rejections coming on, so that's when I make my entry. And wait, let me also show you on my 25,150 call site. So yeah, since today was the expiry, what I did was I managed to trade only in this particular candle. Let me zoom out a little bit. So okay, my entry was at 1.20. So basically I entered at around this level, and I exited at 3 something. So I can't even make a point on this chart, because I it's the hero zero trade. So for hero zero trades, it's difficult to explain much, because it does not depend on the chart movement, but it depends on the price adjustments within this um, particular within this call side and put side for both 25,150. So it's just an adjustment theory which I usually follows. And so like I said, this strike price was undervalued, so that's when I bought it, and I entered at 1.20. So with just 15,000 1,500 quantity, and I exited at 3.75, so which is a good margin according to me. So yeah, that's all, and I only managed to get 3.8 on that particular trade, but it was just a quick entry and quick exit. So I think the trade was just within uh, yeah, within 2 minutes, let's say. So within 2 minutes I managed to book 3.8, and with the adjustment theory. And after I exited, this strike price actually went up to somewhere around like 5 or 6. But uh, I was just confident. No, 4 to 5. So 5 was the high range on the strike price, which I after I have exited. So and so yeah, I think that should be all for the explanation. And for this other four positions, this is the hedging position as I usually do. I usually hold this position till the next expiry. So I think it's a good trade which we have placed. And let me also show you my positions. And okay, anyway, yeah, let me show you the positions for that hedges separately. So what I usually do is I usually place a position on uh, sensible account itself. So what I do is, okay, so for these let me exclude this option buying today. And so for this trade, this is the hedging positions. These two are the main position I'm looking at. So these two, this buying position and this buying position is just the insurance, or like to minimize the um, margin requirements. So that's it. And so yeah, currently we are in a profit of like 8,000, so which is a good thing. And so yeah, I will be holding this till the expiry. So today is 6th September, and so we still have lots of time. Another 5 days to go, excluding including Sundays and Saturdays. So yeah, I think this is a good trade for us. Mm. So I think that should be all for the hedging position explanation. I will be I will try to make a proper video on how I am executing that particular order, or how I am placing that order. So stay tuned. Soon enough I'll try to do that. Yeah, for today's trade we managed to book somewhere around like 7,000, excluding, okay, so, so let me also explain that today's trade we did minimal trades. So only 500 is the tax, including these brokerage charges and everything. So which is a good trade for us today. So yeah, from 7,000 plus, um, we gave some few hundreds as in terms of taxes, but anyways, we somehow managed to get 7,000 in a profit. So even today is a good day for a trade. And I think most of the people actually like make a losses for today, okay, because since the market is like on a sideways, it's not for the option buyers but for the option sellers. So the option sellers will be quite happy that the market is not going anywhere, but for the option buyers, they will be pissed because there was no proper movement to catch and make our entries. So this is one of the reason why option buying is more riskier than option selling. Yeah. So yeah, I think that should be all for today, guys. Thank you so much. I will keep on posting daily charts, daily PNL, and yeah, that should be it. Thank you so much.